Alright, we good. We good. Let me try putting these headphones down. Yeah, just hope the sound is okay. Let me check. I'm just hoping that the sound is okay. It's all fresh. So this video right here, it's for my fellow traders, um, people that are in the financial markets, and I'm just gonna be dropping some jewels. I'm just gonna be dropping some knowledge, some jewels, and making sure that you guys are sort. Okay, so in trading, basically in the retail trading industry, um, when you want to learn how to trade, right? You go on YouTube and you find these videos, and most of these videos basically they talk about technical analysis. Most of them talk about moving averages, indicators, support and resistance, trend lines, and the likes, right? And as a newbie, you're gonna go ahead and like test these methodologies out and strategies. And what most people come across is that they can't build consistency with that, right? They can't find consistency using these tools, your technical analysis and whatnot, right? And soon after that, they just keep on going, testing strategy after strategy after strategy without finding any consistency. Like, I was going through the same path, right? And it's not only until I came across fundamental analysis, right? And at first I didn't really understand it, right? Me and my friends, a group of friends, we bought FBKs. I think it was like a mentorship program. Yeah, it was a mentorship program. So he would tip us off in terms of like news events that we should trade, right? And we were using the straddle strategy, right? I think he refers to it as the 1 minute strategy, right? Where you place a buy stop and a sell stop relative to the current market price, a certain amount of pips, depending on whatever the event you'll be trading, okay? So we tried that, but couldn't really find success doing any of that, right? And it was not till like lately, like recently, not long ago from now, um, I really started researching into like market fundamentals and actually understanding the context of the market. And I've been using technical analysis. I didn't leave technical analysis, even though like I was using FBK's 1 minute strategy or the straddle. Okay, um, I'm not saying that it doesn't work anyhow, but personally, right, I didn't find success doing that, right? It was not only until I understood market context that things really started like working out, right? At first, it was just technicals, and I would make good trades and draw down, make trades that are not working out while still using the same methodology. And I kept on asking the same question: why at these pinpoints is price moving? Why is it acting impulsively at certain pinpoints and at certain levels and at certain retests? Why is it moving? And then when it comes to other retests and pinpoints, it's not working. I just couldn't understand why, right? But it was not only until I started giving myself time in terms of understanding fundamentals and understanding what the forex market is, right? And who owns the market. I think it's all about asking the right question. If you can ask the right question, then the right questions rather, you can reach to a point where like you can find a bit of consistency, right? And um, I came across ICT, and he would explain all these concepts and trading within certain times, of the day, like the New York Open, the London Open, and so forth, right? But it was still like, I was still a bit uncertain. I'd test out those like the strategy, and it wouldn't really give me the consistency that I needed. But it was only after I gave myself time in understanding fundamentals and what they really are and why do they drive the market, right? Because when trading the fundamental events with the straddle strategy, it's like sometimes the CPI would work and other times it wouldn't. Sometimes the NFP would work and other times it wouldn't. Sometimes the interest rate would work and sometimes it didn't, and I didn't understand why. It was only till I sat down and understood what the forex market is and who owns it, who runs it, who controls it, right? And I found out that it's the central banks, right? And as soon as I got into it and got deep into the rabbit hole and understood money supply, understood quantitative easing, understood such concepts, that's when the lights started switching on, right? And following the Fed and understanding why do they raise rates, right? Why do they raise interest rates? Why would they lower interest rates, right? And all of it was due to three main points, right? GDP, which is growth of an economy, right? Inflation, right? How fast prices are rising, and then last but not least, I say growth, inflation, and last but not least, employment, right? So as soon as I started understanding that, right, and understanding the commentary that the Fed would make in their meetings, it's not just the Fed, by the way. It's the Australian Reserve Bank, RBNZ, which is the Reserve Bank of New Zealand, Bank of Canada, European Central Bank. As soon as I started following these central banks and understanding what their targets are in terms of raising interest rates and lowering interest rates, that's when the light bulb rather started going on, and I was like, wow, this is crazy. This is crazy. How could I have not known this all this time, right? And then it came to a point, right? At some I would I found a lot of consistency trading against the yen. So I would trade the AUD JPY, the GBP JPY, NZD JPY. A trade that a pair rather that I didn't trade was the USD JPY. I had a hard time trading that pair. Like I just removed it. It was like, this is eating out of my edge, so I'm just gonna remove it. It's for me. I still find it extremely difficult to trade that pair, right? Um, but it's when I started understanding and I came across Daily FX was one of uh, the people that I came across, right? And then it was trading 180, right? I came across trading 180, and I came across Financial Source, right? And they really like just watching their YouTube videos, I found so much clarity in understanding what builds trends, what makes trends in the financial market. I've seen a lot of traders migrate from forex into um, trading the Nasdaq and indexes, right? US 30 and so forth, because they're complaining about this, like the volatility in the forex market. Like there's not enough volatility in the forex market for us to make gains. But I figured out is that they do not understand what creates trends in the forex market, and I'm gonna go back to why trades that I used to take against the yen used to actually work out, right? So if you look at Japan, right, and their interest rates are at -1%, if I'm not mistaken, right? They're at -1%, right? So if ever I trade those currencies against the yen and their reserve banks are um, hinting that they're going to taper, which is like reduce asset purchases, right? Or hint that they're going to raise interest rate or basically hike interest rates. And I'd find those nice technical setups on like psychological levels, support and resistance, or trend lines. They would work so beautifully. Like they just work so beautifully. And it's not only until I understood what interest rate differential is, right? As soon as I started understanding that we are trying to trade currencies where the interest rates are more likely to be raised compared to currencies that have low interest rates or are keeping interest rates steady. That's where trends are created, because money will always chase yields. Big money is always chasing yields. So if yields from a certain currency are lower than another, that means money is going to flow from where the interest rates are low to where interest rates are high. And that's how trends are created in the market, right? And it's not only until I understood that concept where I could build these trade ideas, and then I mixed them up and meshed them up with my technical analysis, support and resistance, psychological levels, trend lines, time zones, opens and closes, and then with the release of these like events, right? The GDP, right? If ever the Fed says we're going to be looking at the GDP, or we're going to be looking at inflation, and if inflation shoots over our targets, then we're going to be looking forward to tapering or raising rates. That would be something that's going to move the market. But if the Fed is saying that they're going to raise interest rates, and RBNZ, which is the Reserve Bank of New Zealand, is saying that they're going to raise interest rates, then most likely USD is it NZ yeah NZD USD is most likely going to be in a bit of a range. It's not going to really trend because there's not much of a differential. But if you're trading currencies that have a higher interest rate differential, then you're going to be able to catch trends, and you make sure that you are in the right direction of the trend. Then you're most likely going to have trades that work in your direction, right? And I just wanted to share this information to people that um, are not really finding consistency in the trading, right? If you guys want me to help you out in terms of understanding these concepts, just leave comments in the comment box below, and then I'll help you guys understand what like how this whole thing is, and how does it work, and how to catch trends in the market. I'm talking about big trends in the market. So I just hope you guys enjoyed this video, and if ever you did, just hit that like button, and yeah, man, so I hope you guys enjoyed this video. This is it for me, bouncing out.